Hello, welcome to today's webinar. Okay, hi Kelvin, hi Elvis, hi everybody. All right, so the time now is 7:57 p.m. Okay, I'll wait for more of the members to join before we begin. But first, can I check is my volume okay? Is my volume okay? All right, if my volume is okay, can you give me an okay in the chat? All right, perfect. Thanks, Jingy, Alan. Right, can you see my screen? So I'm going to share my PowerPoint slides now. See if you can see my screen. Okay, so if you can see my screen, can you give me a okay as well? Type in the chat okay as well. Yes. Okay. So we'll start in about 3 minutes from here. Okay, we'll start from 8 p.m. to 9:30 p.m. I'm so excited. I have so many things to share with everybody in 21 days. How to turn your portfolio from red to green, right? So if you are looking forward about starting in investing in 2020, especially during this period, right? Can you give a yes in the comment? Okay, can you type yes in the comment if you're wanting to learn how to do investing in 2020? Give a yes in the comment. All right. So right now, I'm going to start this sharing over to the Facebook group as well. Okay, I'm going to start sharing in the Facebook group as well. Okay, so for those friends who don't have the Zoom, right, you can actually use Facebook Live in our 21 days closed group. Okay, then if you are on the 21-day Facebook, right, can you please comment in this Facebook group also to say that I am ready. All right, say that I'm ready. Okay, so for those on the Facebook Live, please help me to see whether my webinars is shared to the Facebook Live. Help me to comment over there and tell your WhatsApp group members, right, whoever that is not here yet, to join me. And in tonight's session, I will share with you some of the very key strategies that you can do in today's bear market. Are you guys excited? How many of you are excited? Okay, if you're excited, right, comment excited. Yeah, comment excited. All right, so coming back here, I'm going to go into my this slides again. Okay, so if you are with me, just please be patient. Okay, thanks for joining on time, right? We have Brian, Kwang, Jingy. I'm so excited. We just ended a 2 days bootcamp 2 days ago. So in 21 days, right, what we do is we share options investing strategies. Okay, excited? Okay, good. So right now, let's start tonight's session so that later before 9:30 p.m., right, you can press your first trade. How many of you want to do your first trade already for tonight? You got money, you got bullets to do. Okay, if you have, right, you can type me in the chat, right? So that I know that you are ready to fire off tonight. Yeah, okay. So if you are ready, yes, all right, thanks everybody. Okay, so let's go and share about the stock market update. Okay, first thing, right, let's understand a bit about the US market, what has happened. We have the coronavirus update recently all across the world. So the US market has crashed. Just in February, right, we have a bull market. And just in the middle, or rather in the middle of February this year, COVID-19 hits the market, and a lot of countries and companies has been affected. So I got my source from CNBC, and you can see, right, coronavirus has led to many countries preparing to lock down or ban tourists from flying from A to B. how many of you here are actually affected by the coronavirus? That means to say you have to stay at home for quarantine or lockdown by your country, right? If you have, right, you can comment number. You can comment 1 if you have been affected by coronavirus. Comment 1 in the chat below if you have been affected by the coronavirus. Okay, whether is it from work, where you have to work from home, or you cannot go out of your house to go shopping, right, to go to crowded places, or even travel to other country, right? So what this means is that this COVID-19 is a very serious disease that is actually spreading. This virus affects everyone globally. Okay, it's not just your country. So what does this mean for us as investor? Okay, so if you look at the coronavirus worldwide, right, this is the cumulated confirmed cases, right? We have hit above 300,000 of people worldwide already. Okay, 300 thousands of people has been confirmed. Okay, and right now you can see that we have close to I would say below 50,000 of the death rate, but it's very scary because just today I see Italy, right? They have increased in number of people who have been hit by coronavirus and they have passed away. Okay, so this is very, very scary, right? So if you are staying at home, you're actually doing everybody a favor. So this is what they say, we stay united. What does it mean? People outside are fighting the virus. We stay indoor to reduce the number of people getting affected. So it's true to say that there is a vaccine in the market right now. And a lot of times when we talk about vaccines for virus, right, it actually takes 2 years to create. 2 years to create. Why? Because there is actually tests on human, but it's an expensive and long process. But why is there such a lockdown, travel ban, companies and businesses ask employees to work from home is because this is actually a faster way to prevent human to human contact. Okay, when we have a reduce in the cases, confirmed cases, the death rate also reduce. We just need to isolate a very small amount of people, and then what happens is that it can be faster than the vaccine is being found. Okay, so this is why countries, right, when there's a pandemic, right, they have come together to work together to slow down the traffic movement between tourists and their own people. Okay, how many of you understand what I just said so far regarding the coronavirus? If you do, right, you can type a yes in the comment. Okay, if you do, you can type a yes in the comment. Right? Okay, so that's good. So for us, right now, let's straight away go into the charting of SPY, because SPY has been the biggest, I would say, US 500 companies involved in it. And if you're a US investor or you do options, right, you absolutely have to know what is SPY and how does it work. Okay, so right now I'm going to switch my screen to the trading view. Okay, to the trading view. And if you are still following me, I want you to focus on my chart right now. Okay, focus on my chart right now. All right, so I want to switch to the day chart of SPY, and this is some of the updates that we have for the market. Okay, these are some of the updates that we have for the market. All right, so for those who are first time investing in the US market, because you think that, hey, a lot of people say recession, market crash. How do you start based on today's market? All right, so you can see, right, I actually have some plans that I given to some of the investors outside. Like, what do we do right now? So first thing, right, for SPY, right, we can see that the market has dropped from a high, okay, of about 340, and it has started to go down over the past 3 to 4 weeks already. In fact, it is the fastest drop in history, where we go beyond 20% in less than 6 months. How many of you realize that SPY has gone down very sharply over the last 1 month? If you do, you can comment yes in the chat below. Okay, if you do, you can comment the chat below. All right, so this means what? This means that it smells opportunity already, but is it the time yet? Is it the time yet? So let's take a look at today's index points, right? So SPY currently is trading at around below 230 per share. Okay, this is my weekly chart of SPY. You can take a look. I'm using www.tradingview.com. Okay, so if you're following on the chart right now, you can see we are way below the 230 already. Okay, way below 230 per share. And when was the last time SPY was at 230? You can see here back in December 2018. That means to say that from December 2018 to now, the market, right? The market has taken about 1 year and 2.5 months, right, to reach 340. From 230, reach 340 in 1.5 months. But in 1 month plus, over since February to now, it has dropped more than 30+%. So this means, right, the opportunity presented is much faster than we expected, and it's really because of the coronavirus or COVID-19. Okay, so what happens is that actually draw the first support line that you can see here. The first support line is at 240. Okay, how many of you can really clearly see, right, from the red boxes here? So the first support is at 240. If you can see, you can comment in the chat 240. Okay, if you can see this support line, right, you can comment 240. So 240 is our first support since the low of December 2018. Okay, so what you can do if you are a new investor, first time investing in the US market, I want you to put in 5% of your money to invest in the ETF or invest in any of the stocks. Why is it so? Because, right, let me ask you a question. Can anybody here predict what will happen in the next 3 to 6 months where the price will go? How many of you can predict the market? Okay, so if you cannot predict the market, the best is not to miss any of the boat. You need to have some skin in the game. You need to have some of your money invested in the current situation. How many of you agree with what I just said? If you do, right, you can comment 1 in the chat below. You can comment 1 in the chat below, right? So if you totally don't want to miss the boat right now, you have to start at least 5%, at least 5%. So we can see right now what happened is that can the market bounce off from 240 over time and goes back up? This is the first possibility, all right? And can the market say maybe it stays sideways and it goes up and down before we know any update about coronavirus? Yes, you can. But in any case, you are already at least a 30% discount. 30% discount. Okay. How many of you like to buy things at discount? How many of you like to buy things at discount? You can type me in the chat, right? So a lot of times when we want to buy at discount, we also want to know how much value are we getting back from here. Okay, how much value are we really getting back from here? So let me tell you, right, the next support that you can see is really based on 2015 to around 2017 right here. Okay, 2015 to 2017. This is the last time the market hit the high, and it's now the next level support. So when we go to the next level support, you got to have a game plan at 220 to start this investing, okay? To start at least the next 10%. That means to say your first tranche of 5% you go in, the next tranche you can start to plan the money of 10% of your capital. That means to say if I have $10,000 at 220, I will put in at least $1,000 to invest. Okay, so from 240 to now, you have used about 15% of your money. Okay, so if you are still with me, right, I want you to take a pen and paper to write down all these important points so that you can really plan and see what is going to happen in the US market. All right, so they always say, right, never fight a battle without a plan. So if you have a plan, you'll be able to win the battle. All right. So the next one, right, we can see back in 2015 and 16, the low is at 180. The third support, right, from here is at 180. Now, the lower it goes, do you agree? You need to be able to capitalize the opportunity by buying more, by investing more. How many of you agree with what I just said? If you agree, right, you can comment more in the chat below. Okay, if you agree, right, you can comment that, let's say on the third support 180, you want to invest more, you can comment more. Now, why is that so? Because very simple. When the stock price goes lower and lower and lower, the amount of money to buy the number of shares increases, and you can actually own more stocks, right? You can actually own more stocks at cheaper price. And which is why the capital invested from 10%, you can now put in another 20%. Okay, you can put in another 20%. And the next support, right, is really very far away. Okay, it's really very far away. It's the last time when I see back in 2011, okay, to 2013, the next support is at 140. Now, if you hit this, I would say that it is you can actually now start to have about 30% of your capital invested. Okay, anything lower than 140, you will be talking at 2009. Okay, 2009, what we call the crisis low. Okay, crisis low. This is like $70 per share, the next low, right? So by then, the market would have already dropped more than 70% discount. 70% discount, all right? So I can only say that anything after 140 for personally my own portfolio is that I will all in all my money from there. My next balance 35%, I will have all in by then. Okay, how many of you learned something from this SPY game plan so far? If you have, right, and you think that is good, can you give me a yes in the chat? Okay, if you think that you have learned something about this planning process, right, the game plan, you can give a yes in the chat. Okay, I hope it gives you a very good clarity towards the market at different key level. All right, so when this game plan, right, is ready, then you need to know, right, as an investor, how long do you need to wait for this bear market to recover? How long you need to wait for this bear market to recover? So let me change my slides to the PowerPoint, okay, so that you will be able to understand a little bit more about our US investment history. Okay, how many of you want to know more about the US investment history so that when you buy, you don't take profit so quickly? Right, if you want, right, you can comment number 2, type number 2 in the chat. I will be able to share with you, right, the whole market history from here. If you want to know, right, like let's say you enter already, how you can actually take profit at the right time. Okay, so let me share with you how is that so. Now let's take a look, right? This is US S&P 500 that shows, right, since 1928 to 2020, which is this year, right? How many of the market drop, right, that is more than 30%. I got it from the source here, Bespoke Investment Group. You can check out the link later. Okay, so how can we use this information to help us? Let's take a look in the red box, right? I was born in the year 1990. So anything above that, right, I'm not aware or I'm not sure what has happened. But for me right now, you can see a bear market, right, has only happened 3 times. And out of the 2, I am still studying or being a student. But right now, for this year, is the one of the time that happened in my lifetime. Okay, so if you want to make a lot of money, they say this, there's always this sentence, right? Bull market helps you to make money, bear market helps you to make generation wealth. How many of you heard of this sentence before? How many of you understood this sentence, right? You can give a yes in the comment. Okay, if you understood this, you can give a yes in the comment. So if you really want to have generation wealth, what does it mean? Money that you can give to your wife, to your partner, to your children, okay, multiple folds, right? This is the time, opportunity of the lifetime to focus. So right now we can see from the 2000, right, is the dot-com bubble, okay? Then after that, 07, we have the housing bubble, Lehman Brothers. And then right now we have COVID-19. I want you to just focus, right, on the 6 month and 1 year, okay? On the 6 month and 1 year. Right now, you can see the market just start to drop a little, okay? We are talking about since February to now, it's only about 1 month period. You can see, right, for the market, when they actually drop, in the last crisis, right, they dropped about 20%. Okay, in 6 months, they drop about 20%. But for this year, we have already hit 30% in 1 month. Okay, so this is what is happening. And what happens is that you can see for the 1 year, right, in the 07 to 08, they already start to have what? Very little drop already. In fact, after that in '09, they already start to recover. So that takes about 2 years when the market recovers. 2 years when the market recovers. So you can write this down, right? This is interesting facts from the past to now. And let's take a look at the maximum drop that the last two crises have. In the dot-com bubble in 2000, the max decline is only 25%, which this year we already gone past already. If you look at the housing bubble in Lehman Brothers period, right, we have the 36%. So somewhere now we are at about 36%. So is it possible, guys, that we hit this 36% and then we have a very sharp recovery? Do you think it's possible? If you think it's possible, you can give a comment 1. If you think it's not possible, you can give a comment 2. I want to hear from you guys. Okay, so we have a mix. We have some that says 1, some that says 2. Okay, so this is the reason why you should start a little bit of your money into the market, because you are guaranteed buying near the drop like exit is in the Lehman Brothers, the housing bubbles back in the '08. So which is why 5% of your money should already be looking into the market already. Okay, so this is the reason. And you can take a look at the next one, just one level below the red box. There's this thing called the average. It tells you that on average since last financial crisis, every time it happens, the market average drop about 30%. 30%. Okay, so can it go further? If you have your game plan, you are ready. All right, you are ready. How many of you learned a lot more about the bear market from last time to now? If you have, right, you can type yes in the comment. All right, I want to know whether do you guys understood about all these issues so far. Okay, so if you understood, right, there's something very interesting I want to share with you is this. Whenever the market has a very huge crash, means drop very quickly, or there is a very serious issue in the economy, there's this thing called VIX. Now, if you do not know what is VIX, right, VIX right, is actually a tool that people measure how many people are actually buying insurance in the options market. Okay, VIX is something like the more people pay money, the premium goes up. The more people buy insurance to protect their portfolio, VIX measures, right, it goes up. Okay, VIX, it goes up. So you can see that very interesting, right, from the 2008, right, there is a housing bubble. That is our last crisis. The VIX spikes to about 80. Okay, and by the time it's 2010, the VIX has already gone down to about 50% or below. Right, so VIX was at about 80 back in the '08, '09, right? And then after that, it starts to goes down, it cools down all the way to 2010, right? 2010. Now, if you look at where we are today, VIX has also gone up to about the highest, which is recorded at the 3rd March 16. What does this mean? This means that people are coming out with a lot of money to buy insurance during this period of time. Okay, pay attention. People are paying a lot of money to buy insurance, all right, on the premium in the options market right now. And we are now from 82 dropping to about 66. Will we stay there or will we go further? I don't know. But the only thing I know is for VIX, right, it means that now if you're talking about options premium, it is definitely more expensive. How many of you learned something from this VIX slide here? If you have, right, you can comment yes in the chat. If you learned something from the VIX, right, you can type yes in the chat. Okay, so how can we use this information to help us as an option investor or as an investor in the US market? Right, so I'm going to share something really powerful with you guys, right? So what does this mean? If you are not sure about VIX, right, VIX is created by CBOE. Okay, so what they do is they actually track how many people pay more money to buy the options. And it's actually a measure. If you look at the last sentence, if you don't know anything, just look at the last sentence of this paragraph. It says it's a measure of market risk and investor sentiment. That means the higher VIX goes, it tells you that people are scared, people are very worried, people are very panicked about the market. And the higher it goes, you can see the stock price in the stock market, it goes down by a lot. So this is the relationship between VIX and the stock market. Okay, so how can we use this information to our advantage? So if you are buying options or you are selling options, this will affect you in your position. All right. So if you want to know how to safely protect yourself, right, you can type yes in the chat. I will share with you from this slide on how can we do about it. All right. So are you guys ready? Cool? Yeah? Okay, let's go. So what happens for VIX is like that. The higher the VIX is expensive, it says this word called implied volatility. It tells you that the market has been moving up and down, up and down. Okay, this spike, right, tells us that more people are buying insurance in today's market, So the best time, right, to make Fed premium, okay, Fed premium, right, is to sell options. Whether you are selling put or selling call, this is the time where you will see a lot of money can flow to you. The only thing is when you're going to do it, how you're going to do it, right? But the first thing is you need to know why VIX is useful to some investor. Okay, understand? So the next one, right, is you can sell put on the stock that you wish to own. Right? If you sell put, you get the high premium. That premium credits to your account is a profit to you. And if you really get the stocks right now, because SPY has already gone down 35%. So if you sell put on the stock you wish to own, you can make some money also. All right. So the next thing is, of course, you can do a spread. Okay, a spread is an option strategy that requires you to have two legs, which I will explain in the next slide. But what we are talking about is this thing called a bear call. Okay, this thing called a bear call. Right. So why all these things? Because now VIX is high, is expensive. Okay, if you're coming out money to buy, okay, if you're buying call or buying put right now, you're going to pay a lot of price. Okay, and when the market cools down, pay attention. The buying, right, will lose money. That means that those who buy put or buy call during this period and you do nothing, when the volatility cools down, VIX drop, your options will also lose money. How many of you understood what I just said? Okay, if you think this is good, can you comment 2 in the chat below? Comment 2 in the chat below. All right, so I hope that all these things will be able to protect you and you upgrade your level of knowledge from an investor to options investor. Okay, so one of the things that you really need to know is that if you have a chance, if your buy call options is losing money, you may now want to reduce them. Okay, you may now want to reduce them because the market will not be able to show any sign of rebound during this period. Because why? Even COVID-19, the US haven't really said about their total cases, whether they will lock down or not. Okay, there's a very huge serious issue where health care sectors facilities, right, not enough supply, not enough masks, not enough treatment for the people who are getting sick. And this will continue if it's not solved properly. Okay, so remember your core options you buy is to expect the price to go up, right? During this period of time, it will face very, very big difficulty. Okay, it's like swimming, right? It's like swimming, but you're swimming what? You're swimming up a water fountain. Okay, you're swimming out. So it's very, very difficult to make if you have the core options, right? So I want to share with you something that I personally feel it gives you a very good visuals, good understanding about the market, right? And this is since February 19. This is up to, I would say about 3 days ago, the data from 3 days ago. So because the market is not open, but I want you to take a look from here and focus on the bottom left-hand side, where we have the ETF XLY, XLP, all the way to XLU. I want you to focus on them because this tells us which sectors are being affected the highest and which sectors is the lowest. Okay, so I want you to spend some time looking at all these sectors because if your company is inside one of these sectors, you will be affected. Okay, if you invest in US market and they are in the S&P 500 or NASDAQ or Dow Jones, you will be affected because you see SPY at the top here is down already. Okay, if you look at QQQ, NASDAQ is also down, right? So you invest in any of the stock at the start of the year to now, definitely you will see some losses in your account. So this is normal, but the only thing is you do not want to be trapped to go even further. Okay, so you can see, right, there is things that are highlighted in red here. The red ones tells us that the percentage drop, right, is more than 50%. Okay, even countries are like Brazil. If you look at the top right, Brazil has also been down what at least 50%. So you invest in EWZ, you can see the chart right now is going downtrend because Brazil has heavy investment in oil. Okay, so that's why they are related. That's why they are affected. All right. So you can see here. Let's come back here and stay focused on what are some of the sectors that may not drop so much. In fact, they may benefit from COVID-19. How many of you want to know which sector will benefit from COVID-19? Okay, if you want, you can type me in the chat. I'm going to share with you the two most important ones that will actually take advantage when the time is right. Okay, take advantage when the time is right. So what happens is this, let's take a look. If you're coming into ETF, right, the benefit about ETF is that it's a basket of stocks. You don't need to buy one single company. Maybe some of you are weak in understanding one company. Go to the ETF and buy a basket of the ETF. So the first one I highlighted here is called the consumer staples. Okay, consumer staples are where companies do things like rice, like rice, oil, water. Okay, some of the basic stuff, right, that actually people need it from their daily life. Even your toothpaste, right, your conditioner. Okay, some of the important things that you need to eat and consume. This is from consumer staples. So companies like P&G, Walmart, okay, they are actually inside, even like Coca-Cola, they are also inside this XLP. So you can go and check it out, right? So XLP consumer staples, you can see between all the rest of them, they are the one that only dropped 19.9%. But the rest of them are almost close to 30% already. So if you have noticed this, right, that's the reason why. Because now a lot of people are scared to stay at home. There's a lockdown. Do you think what they will do? They will go and buy what? Toilet paper. They'll go and buy rice. They'll go and buy Maggi noodles. They'll go and buy toothpaste. They'll go buy additional stuff that they can store during this period of time. Right? So you can see that some supermarket companies, some of the share price are still going up. In fact, they are still uptrend. So do your homework, do yourself a favor, look into this company that will benefit during COVID-19 because COVID-19 can last more than 1 year from now. Okay, so this is for XLP. Now let's take a look at the next one from here, which is what we call XLU. Okay, XLU is what we call the utilities. Companies that supplies electricity, companies that supplies energy to your house, to the car, to anything that you uses is under utilities. Now, why these two, right, is that because they are the main things that human beings need. This is the priority of our basic need, and which is why these two ETF, they are more defensive. The keyword here is they are more defensive. So if you are looking into companies like this, can go and look into what are some of the stocks in the these two sectors. All right. I believe that right now you all can see, right, even for financial banks, right, some of the companies in discretionary like entertainment, tourism, right, casinos, XLY, I'm talking about XLY, right, like this, they are also affected. Okay. The one I can say that will benefit next is the healthcare. But healthcare, I'm not so sure about the performance so far because there is also what we call government regulation to how the company will function. All right. So, but for me, I know that consumer staples and utilities, more or less, they will be defensive, but the rest of them will be affected. In fact, you can see, right, we have energy coming down, we have consumer discretionary going down, we have the industrial, okay, those that materials, projects, right, they're also coming down. Financial, right, banks will be hit. Pay attention, if you have banks in your portfolio, right, one thing I want to be sure with you is that banks will also need help because company no money, right? Company will be affected because factories are being shut down due to virus, okay? People are staying from home, people are spending less at certain businesses. And who lends money to all these business? The banks, okay? So the banks during crisis, right, they will be affected the most, they are most sensitive, but when the market recovers, banks are also the first one to take the lead. So you need to know from your charting, right, when is the time this turning point will come. I will share in the next video about how we can do this, but in today's context, right, we'll be looking at the top two defensive sectors. How many of you, right, had understood about the sectors in the US economy? Okay, if it gives you a confidence more, right, can you give me a 3 in the comment so that I understand what I just said is relevant to you? All right, so you can comment 3 in the chat below so that I know it's really very relevant to you. Okay, so let's move on and take a look at some of the things that we can actually break it down further so that if you're planning your portfolio, what more can you do to your game plan? Okay, so the game plan is, let's be very focused. February, right, the first 2 weeks is still considered like the bull market, but after that, straight away, right, the market plunge, right, in February, we turn into what? It turn into a bear market soon. Okay, a bear market soon. All right, because anything more than 20% drop, we consider what? A recession, and leading to bear market means the economy will be affected more than 6 months. Okay, more than 6 months. So one of the things, right, that people will always look at is, can I short weak foundation stocks, companies that has very bad financials, right? You can use bear call spread to actually short them. So this is a strategy that if you are staying with me all the way to the end, I will share with you how to do it. All right. And of course, if you are what we call value investor, if you know about owning stocks at cheap price, now the market is 30%, and you think that you want to own some stocks at the price already, you can do sell put options because VIX is high. And when VIX is high, you can make some money. Okay. How many of you want to make money? Right, if you want to make money, you can type money in the chat, right? Type money, make money in the chat. I'll share with you more of this game plan, because if you are really serious, right, want to make money, what I can share with you is that later we go through some of the stocks, right? What put options can we do? What bear call can we short on? All these will give you some money along the way. Let's make money even in the bear market, right? So the next thing I want to know, right, is that you've got to have your portfolio management between your cash ratio and the position you have. So the trick is very simple. When market drops more and more, your cash level will be less and less. When markets drop more and more, your cash level will be less and less because you'll be entering. When market goes up, you'll be looking to sell, right? You will be looking to sell. Your cash level will also slowly go up along the way. All right. So if you understood this, you've got to know your cash ratio and how to enter at 10%, 5%, 15%. So I already shared with you when we're going to do it, but the how and exactly what we're going to do will be discussed here. Okay. So the first thing, right, is all the basic of choosing company, right? You really have to know, like, there are some companies who will not survive during the bear market. And one of the top key things that kill most companies is this. What do you think is the answer is? If you know what the answer is, you can comment in the chat. What's the one thing that will kill any company in the world during a recession? Okay, you can type your answer in the chat. Yes, fantastic. The answer is debt. The money that the company borrow, and since their business is affected, the revenue is dropping, right? When the company cannot function, their debts is high, they will go bankrupt, they will default, they will have to pay, and then eventually the share price will plunge. So right now, there's a few industry already asking for help. What is the one top priority company in the market asking for help? It is the airline. Okay, it is the airline. Let me share with you, if you are companies that are high debt and you're asking for help, right? Do you think you can really get the help during this period? Is it going to be immediately? Is it going to be fast? Let me share with you one article, right, on my screen here, and you will be surprised what is really happening to the market. Okay, you'll be surprised what is actually happening to the market. So this article is actually from the seekingalpha.com. Okay, if you are looking at Seeking Alpha right now, you can see, right, cash grants for airlines look set to fail. Let's zoom in and take a look at the sentence here. Okay, it appears to be unsuccessful because the government are not able to agree. Can you see that? Can you guys see that? Okay, so this means if your company is looking for government support, then you have to consider whether in the first place, do you want to invest in them? Let me tell you this thing, even for companies that are invested with government agency, the last round in the oil sector crisis, right? Some of the country level companies are being chosen to close down because the government say, no, I don't want to support you. So in the first place, right, if you're choosing companies that have high debts, please review them and be very careful about your investment in it. Okay? How many of you, right, after this slide, you want to go back and see which are the high debts company in your shopping list? Okay, if you want to, you type me, I will show you how to do it. Okay, you can type me, I will show you how to do it, right? So let's take a look at one of the very key companies here. Okay, key companies here is that we have this thing called Morningstar. Okay, we have this thing called Morningstar. If you are using Morningstar, right, it's a free account. You can get it up anytime. Log in and press this thing. Right, let's say we take a look at Delta Airlines. Delta Airlines, you can key the key ratio and you key full key data. This tab will appear. Right? So we know that this is a page where we can see the financials overview of the company. But what's the key thing you can do is that you can go and click on this thing called the financial health. Now, right now, I want you to prepare your pen, your paper to write it down. Okay, write it down. What is the one additional fundamental step you can take? Is this thing called the debt to equity. Okay, every company, right, the money they have and they start up is called capital, or also known as equity. But the debt that they do is what they borrow from banks, from institutions. And this, right, is a ratio that we see. If let's say your company equity is 1 million and your company borrow money up to 2 million, your debt to equity is a score of 2. Okay, it's a score of 2. So let's take a look at Delta Airlines, right? What is their debt to equity? If you see at the latest quarter, okay, is showing 0.92. That means every $1 the company have, 92 cents is borrowed money. How many of you understand this debt to equity? If you yes, if you can understand, then you comment yes in the chat. Okay, so this is one key thing that can help you instantly to not choose high debt companies, because now we are going recession, we're going to the bear market. Companies may be in trouble to pay. I know the stock price is going to go down. I know the price is cheap, but cheap can go cheaper. How many of you agree with this statement? Stock price are low, can go lower. If you do agree, right, you can type agree in the chat. Okay, stock price low can go lower. If you do agree, you can type agree in the chat. Right. So what happens now is that now you can see with this ratio, debt to equity, we are referring to the company's debt, that whether they have it now or long term or short term, doesn't matter. It tells us that today they may not have the ability to return. Okay, it's high risk now. I can tell you during the housing bubble, when the banks default, the banks fail, do you think companies will have a good time? Companies do not even have money to borrow. Don't say the short term or long term. Okay, so this is the part where you have to be very, very careful. So what you can do is, let's say we take a look at maybe another company called Las Vegas Sands, okay, which is a company that's being affected by COVID-19 now, right? Let's take a look whether will Las Vegas Sands survive during this period of time, right? So even if your company, okay, have money coming in, but you cannot pay your debts, right? Eventually, the company still, they will suffer. So can you see, right, for Las Vegas Sands, what is the debt to equity right now? Okay, can you guys see what's the debt to equity? They have 2.39. That means every $1 in the company today, $2.39 is borrowed money. And it can be very, very scary, because what happens? Because, right, when the companies cannot pay back, then they may have to raise money by diluting their shares, or they will bankrupt eventually. It's a matter of time. Okay, it's a matter of time. All right, so please help yourself by doing this filter step. By number one, check the debt to equity. So let me go back to my slides. Right, I will share with you what is the key thing that you can look at for debt to equity. Is that if you have debt to equity above 0.75, that means every $1 the company need to borrow about 75 cents, then you might need to put them aside. Doesn't mean they are bad companies, don't get me wrong, but in terms of choosing good quality companies, you may not stand a chance. You may not stand a chance. Okay. So I have come across some companies that really their fundamentals are much stronger in even in today's terms. Okay. Have you guys heard about this company called the Visa? Okay, if you are using Visa, one of the payment companies, I would say the global payments online company, even with COVID-19, transaction is still flowing through today. If you are buying food through food delivery also, right, there's an increase in food delivery, right? Spendings is still there. You can take a look at their financial health, right? You can see for Visa, every $1 a company has, they only borrow 46 cents. Okay, they only borrow 46 cents. They are not at a very high level to do business. Can you see that? So between Delta Airlines and Visa, I want to know which company will you choose? Okay, please type in the comment, right? What companies will you choose between Visa and Delta Airlines? So the answer and the comparison when it's placed side by side, it is what? Very, very clear. Okay? So I know that Visa stands a higher chance to survive during the recession. Okay? I hope this is a very crucial learning development in you choosing your own stocks from today. Okay? In you choosing your own stocks. So you can use Morningstar to check it out, right? So what are some of the sectors that will be badly affected? This is one of the lists that I prepared. We have the airlines, so you have Boeing, you have Delta Airlines, you have other factors, right? So the key thing is focus on the sectors that you know and use debt to equity to help you, okay? But we have companies in the hotel, travel agency, F&B, resort and parks, right? This is referring to things like theme parks, okay? Theme parks like Disney, Universal Studio, they may be affected. We have transportation, right? People travel less during period, and of course, banks. And the main thing is, I think countries that is using what we call controlling the virus, and their market is big, right? We have China affected. Japan, right, particularly is in a difficult spot because of the Olympics, okay? Because of the Olympics. And in fact, Japan has spent a lot of money, right, bidding. And when they are starting to build, right, they build infrastructures, they build the stadium. Okay, the last time, right, when Olympic is in Greece, in one of country in Europe, right, I remember that after building, the economy did not improve. A lot of these stadiums, right, is bye-bye. That means to say they did not have good advantage. Japan, right, haven't even start Olympics, right? They are being affected because they may postpone or right delay the game. Okay, even if they do start the game, some countries are like Canada. Today's news, right? They already say that no, they're gonna not send their people over there because why? They may be affected by COVID-19. Okay, so I hope you guys understand the seriousness about all these sectors being affected. Those with the high debts is where you want to avoid. Choose the ones that are good. But if let's say you want to really invest, right? Invest today. So these are the sectors that may help. How many of you want to know that the sectors are what we call anytime, right? They will be able to survive during this recession. How many of you want to know? If you want to know, right, you can comment me. I'll share with you in the next slide, right? What is this all about? Okay, sectors, right, that can help you to build a stronger portfolio. Okay, the cheaper they go, the more you want to focus on them, right? So the stock list I have is rather, it's not very long, but I only want you to really focus on 5 of them. Let me share with you why. First one, Google. Are you using Google in your daily life? Okay, Google Maps, okay, if you're using Gmail, you're using their software, even YouTube, okay, if you're watching YouTube at home during this period of time, Google is one of the things that makes advertising money. Yes, they will be affected because businesses advertise less, Google may be affected. Okay, so Google is definitely one of the, I would say, a grade A kind of company because it is everywhere and people need it. All right, so this is Google. The next one is Amazon. Amazon, right, is even crazy. Those companies that fire people, asked to work from home or, not able to work, right? Amazon is offering, I would say, a job opportunity to hire them because they expect people to order stuff from point to point and doing logistics delivery. Okay, so Amazon is going to be even more obvious business that people will need in the next 3 to 5 years. Okay, how many of you actually use what we call the online to buy something or deliver something to your house today? Okay, if you're on the e-commerce or at least food, right, can you comment one in the chat? Right, can you comment one in the chat? If you recently or over at least the last 1 year, if you have been using online to do something delivery, then e-commerce or delivery businesses, right, they will start to benefit. Okay, so this is one key thing you want to take note. Next, right, is what we call the businesses that transaction happens and people are still following. Right, we have Visa, Master, and Facebook. Personally, I've already invested in Visa and Master. Okay, this is my own portfolio right now. So why Facebook also is because like this, even though we have a lot of businesses trying to go online, but the only way they can reach out to more people is still in Facebook, okay? It's still in Instagram. And in fact, if you are still at home, you are going to use WhatsApp to chat with each other. So this is why these 5 companies, right, are what we call businesses that have strong foothold that are likely in the recession, people are still going to use it. Okay, how many of you find these 5 stocks, right, simple and easy? The business is simple and easy. If you find it simple and easy, comment easy in the chat. Comment easy in the chat. If you think that the business is easy to understand, okay, comment easy in the chat. All right, so this is why when I say choose only your top 5, this is the reason. Okay, of course there are more. We have companies like Intel, we have AMD, okay, we have Nike, right? So these are some of the brands that people are aware. But the question is, between all these companies, which one is your top 5 that you want to choose? Okay, of course there is a company that is like Tesla, disruptive. We have Salesforce, we have other companies that are disruptive, means they are leading a new technology, and in the future, it's definitely true that people will need it. But I put a star there is because Tesla fundamental is not as strong. So even if you have a lot of money, it depends on how well you know each of them. You can allocate more money to the one you know the most. So start from number 1, right? The one that you think people will need the most and spend the most money on. Okay, so why choose 5? Because I can tell you, if you have anything more than 5, right, you will not be able to keep track of the company news, company updates, the CEO say something, you don't even have time to do it. Okay, so this is the reason why if you have like 20 stocks, 30 stocks, right, it can be very difficult for you to keep track. All right, so as long as your portfolio is below 100,000, I already feel that one of the key things that why people cannot choose on their paralyzed, there are too many stocks in their list. So choose only the top 5 that you yourself can understand. Okay, if let's say I don't understand Tesla, get out of it. If I think Tesla fundamental is not good, remove it. Okay, if you think that you don't know AMD, you don't know chips, right, remove it. You don't need them. You only need the business that you can understand. All right, so if let's say you want to have ETF, right, what you can do is you can look at, of course, SPY. You can look at the technologies, QQQ, XLK. You can look at XLU and XLP. Okay, why are we looking so much into ETF? Because a lot of investors, right, when they are first 1 to 2 years of starting out, you don't have a good framework, right? I share a lot of the art of choosing stocks, and also share the art of actually avoiding stocks. But if you really want to know a lot about this, right, you have to go and understand fundamental investing, FA, okay? FA is something that our team provides, but if you're really keen, right, after this sharing, you can actually drop us a PM or something like that. We will share with you where you can take more of fundamentals study, because we prepare a series of videos, and the time is right, we'll release out to you, because I really want to know, right, how best fundamentals, right, is something that you guys need it, okay? Because fundamentals help you to avoid companies that cannot survive, but fundamentals can also help you to find good companies at cheap price. This is the key about what Warren Buffett always say: buy reasonable, buy good companies at reasonable price. Buy good companies at reasonable price. Okay, so this is the thing. So right now, after you guys have the game plan, right? How many of you are ready to come back to the stock market? Okay, if you are ready, comment ready in the chat. You are ready. and more confident from tonight's sharing session, right, type ready in the chat. Thank you, everybody. Okay, so if you're ready, right, I'm going to share with you the best strategy. But before I do that, one of the things why a lot of investors fail big time is because remember this from this 2000 right to now, there's only 3 bear market that happens. One is the dot-com bubble. The other one is the housing Lehman Brothers during the 08. And then the last one is the period where we are. That means to say over the last 20 years, you only have 3 periods, right, where the market is dropping. Drop really a lot. Okay. So if you don't do so many strategies, you are also okay. You are going to be an investor that is going to make money over a period of time because of SPY, because of other investment you do. Okay. So one of the key things is when I share about best strategy, please take note that you can only use about 20% of the time. Most of the time, the US market is going to go up, and that's like 80% of the time. Okay. How of you understood this? If you understood what I just said, give me a 1 in the comment. Okay. And then I will present to you the best strategy. Okay. If you understood this, right, I'll present to you the best strategy, right? So how does it work is like this, right? So I have this thing called a bear call spread. Okay. Bear call spread consists of 2 legs. That means you got 2 option transaction that needs to happen. And this is called a bear call spread. So what's the criteria? So the first thing, right, I want you to write it down is you need a 2 weeks to expiration. What does this mean? This means the contract, right, only for 2 weeks. Understand? Okay. Bear call in normal circumstances, 2 weeks to expiration, right? And let's say if you want to risk, that means to say if I do any strategy, right, there will be reward, which is what we call the returns. There will also be risk. Okay. So if you want to risk, right, it's only about 2% of your capital. 2% of your capital. Anyway, bear call spread don't require big portion of your money. Okay, bear call spread don't require big portion of money. But in any case, you don't want to increase the number of contract you are doing. I want you to limit to 2% of your capital, okay, per trader. And of course, in this period of time, if you are starting new on any strategy, you don't want to do more than 3 companies at one go. 3 companies at one go. You will not be able to take it, neither will you be able to track it. Okay? I'm trying to help you to stay focused on what is really important and the key action you can take. Right? So no more than 3 companies or bear call at any one time. If you understood all these 3 things, you are more or less in a good hands to really know how bear strategy works and take some money. Okay? So the last thing is the ROI on the credit premium you receive is at least 40%. If it's less than 40%, please don't do it. So what is ROI and how we calculate? Let's go to the next few slides and I will share it with you. Okay, one of the key things, right, that a lot of investors do during this period is like this. When the stock is dropping, then they think about they want to short. Then they think about they want to do a bear strategy. Let me ask you this. If you are healthy and you buy insurance, do you think your insurance is cheap or expensive? If you are healthy right now, if you buy insurance, right, your insurance is cheap or expensive? It's cheap, right? But when you are sick, right, your insurance is going to be very, very expensive. So during this period of time, the market is dropping down. Remember I say this, VIX is what? Going high up. And by the time you think about you want to do buy put, you want to do other shorting strategy, it will cost you a lot of money. And which is why bear call is so good because we are taking premium to our account. I'm sharing with you all this because I have done this many times and I have used some results and some of the students have really done it. They're also looking at profits even as we are talking today. So one of the things is you need to know, you can go to your hourly chart to strike on at resistance. Hourly chart, strike on at resistance, and you can do it. So let me give you the example how to execute this whole thing. All right. So if you want to be executor on bear call spread, you can type ready and I will take you to that. Okay, you can type ready and let's go and do it, right? So how can we do bear call spread? It's very simple, okay? The first one you need to do is you need to sell a call to receive and collect premium. Okay, the first thing is you need to sell a call to receive premium. You also need to do a buy call to pay premium. So these two legs must happen. How to do it? Let me give you an example. So the stock price today is at $99. You go to your options table on the call side, right? You look for options expiration. Okay, the date to expiration, right, is 2 weeks from now. What you can do is you can sell call at 100. You receive a premium of $4. Then you do simultaneously a buy call at 105, but you pay $2. Okay, so if you understood this, right, can you give me an okay in the chat? This one is what we call a bear call spread. If you understood this, give an okay in the chat. Okay, so what happens, right, is that now you know the stock is at 99, you do 100, and then you buy a call at 105. Okay, easy. So what happens is that there's only 3 scenarios the stock price can go after you do your transaction. The first one, point number 1, if the stock price goes below, that means drop below 100, congratulations, full profit to you, you collect the premium. Okay, you collect the premium. So how much you collect? How much you collect? You sell call for $4, you buy a call for $2, your net premium credited to your account immediately is $2. So if the price goes below 100, expire worthless, don't need to do anything. All right, so this is a profit. That's why bear call means you expect the stock price to go down. Now, if let's say the stock price goes between 100 to 105, in between, you may lose about $1.50 to $3 expected. Okay, sometimes it may be profit, depend on the time that you are looking at it. Okay, because everybody invests, right? The timing that they do can be very different, especially during this period. Market can go up $3 to $5 in, I would say, 20 minutes, and it can also go down in 20 minutes. So please be careful with it. Okay, so if the price goes between 100 and 105, close both legs together. I don't want you to, be smart and then, oh, let's close one leg because I think I can still bet on the direction. No, do it fast and good, close both legs. Okay, how you start is how you end, right? So third point is if the stock price shoot above 105, it could be 110, 120, right? Because the market recover for some reason, because you didn't do your charting properly, then what happens is that you will lose $3 for this entire leg. This $3 is a fixed loss, okay? It's a fixed loss. So what you have to do by then is close both legs, close both legs, all right? So how many of you understood this strategy arrangement? If you understood, type yes in the chat. The 3 direction happens scenario. If you know what you are doing, type yes in the chat. Okay, it's really very, very simple. All right. So what happens, right, is let's go to the ROI calculation. What really happens the money in your account? Okay, what really happens for the money in your account? So let's take a look here. So how we calculate the ROI is this. Premium is the money you receive. When you close your contract, you lose money, that is your risk. So how do we know is that first, $2, all right, $2 is the net credit because initially you collected $4, you pay $2, your total credit is $2. So this is the net credit premium, right? The net credit premium you receive, okay? So what is the risk? The risk is that the legs are between 105 and $100. This is the spread, okay? 105 and 100, this is the spread. The spread is $5. And because you receive $2 of your premium, your total risk is $3. Okay? So how do we calculate the ROI? Is $2 divided by 3, you get an ROI of 66%. 66%. So you won't lose anything more than $3. Why? Because the options is set up such that it limit your risk, but your profit also limited. Okay, you collect $2, but you risk to lose $3, and that's why we get the 66% ROI. So when do you close? Right, is you close on the expiration date. That means the 2 weeks, right? That Friday. Okay, the second week Friday. Right, the week that you do the Friday itself. Okay, so that's where you close them. Right. So for this strategy, right, is to collect money. That's why your strategy, when it's set up, right, your loss is fixed. You won't lose more than the $3. Okay. So if the price shoot up, like let's say on the last day, 106, okay, shoot up at 106, 105, 104, 103, 102, 101, 100, I want you to close the leg. But if it's below, let's say 99, right, 98, 97, 96, $80, do nothing. You guys understand? If you understand everything about this, right, and you are confident, can you type an OK in the chat? Okay, you can type OK in the chat. Now, this strategy, right, is really for people who want to collect premium by betting that the stock price will go down. Okay, so whatever it is, if you are ready to lose this 300 and you are ready to collect the premium of 200 and all the criteria pass, you can do that. Okay, so from step 1 to this, right, all these you can actually write it down in your notes. It's actually very simple to do it. So how can we see what else can we do from here, right? Is that I want you to pay attention to this. I'm going to go into the stock chart first so that you understand a little bit what I'm doing, okay? So stay tuned. If you're staying behind, right, stay tuned about the charting process. How are we going to do it? Okay, so let's say right now, all right, we are looking at Las Vegas Sands because why? Fundamentally, the company, right, has high debts. And how many of you think Las Vegas Sands businesses will be affected? If you think it will be affected, can you type a yes in the chat? Las Vegas Sands, okay? That means it will not be in your shopping list. You will not want to buy any of the stocks, right? But you want to make some money on shorting Las Vegas Sands. This is what you need to do. First, go and check about the company, right? So this company, they have their ups and downs, okay? But the company, what is happening is that recently their debt is also quite high. And I think COVID-19, right, the customer is going to drop a lot. I think this is one of a candidate that we can look into. So what is the next thing, right, is you need to go and take a look at the stock chart, okay? So let's take a look at the Las Vegas Sands stock chart right now, okay? So what happened is that you guys can see very, very clearly the company stock price has already plunged, okay? The company stock price has already plunged. How much has they plunged? Let's take a look. From here all the way to the low, they have dropped almost 50% already, okay? There's this thing that you need to understand is that a company can only drop to $1. Okay, if the company bankrupt, sometimes even your options, right, there may be an issue for you to collect money. Okay, please understand. All right, sometimes when we do shares or we do options, right, it does affect. So bear call spread, right, is 2 weeks. The maximum, right, loss is how much? $3 from that example. Okay, so if you're okay to risk $3 based on your portfolio, then proceed, right? So right now, what happened is that I want to be able to time whether Las Vegas Sands to do the trade, right, is you can use hourly chart to help you, okay? You go to the 1 hour chart. I want you to draw your short-term support and resistance. What do I mean? Let's take a look at the downtrend. Can you guys see? Right, the stock has been on a very severe downtrend. Okay, the stock has been on a very severe downtrend, and in fact, I think it's a very what we call persistent downtrend over the past few days. So what happens, right, when we see something like that is that you might want to even go on the last 1 to 2 days to see whether is there a drop in the resistance price. Okay, resistance means it's like a ball, right? You throw up to the ceiling, it may bounce and come down. Okay, So you can see right here, okay, right here. Let me zoom in a little bit for you. All right, over the last few hours, right, Las Vegas Sands has already started to go down. In fact, where we are looking at is this is the price target, okay, the price target of the support. So where is it? I'm looking at this area here. Okay, so if you are shorting, right, if you are shorting, you have a target of between $43 dropping all the way to $35. Okay, will I succeed? I'm not sure, but I do know that now the stock is downtrend. We have a good chance. If I make, right, I'll collect the $2. If I lose, I will risk the $3. So right now, we have a higher chance of success when the stock price, right, bounce from here, and now we are looking at over the next few days. Okay, so that's why this trade, right, you limit to 2 weeks and you can instantly see what is the outcome already. All right, so let's decide now. If let's say Las Vegas Sands is a company that you want to do the short, then you have to go to the options table. Okay, let's take a look at the options table. So if you're looking at to do on Las Vegas Sands, the code is LVS. Okay, I want you to take a look. So I am at my Think or Swim right now. If you can see my chart, can you give a 1 in the comment? All right, so I'm now at Think or Swim. It's a platform I'm using, right? So Las Vegas Sands, okay, we are looking at how can we short this. So right now, you can see that we got the purple, okay, highlighted on my screen on the left is a purple. This is the expiration date. 2 weeks from now, right, the closest I can find is 3rd April. 3rd April, 2 weeks from here, okay? So renting is on your call options right now, okay? Your call options, right? Today price is about 43. So what you can do is you can now take a look at the call options, okay? I'm not sure whether the market is going to change or not, okay? Whether we will be higher, lower. But as long as it hits our resistance at maybe the 45 mark, right, you can start to do the spreads from here. Okay, so you can see, right, we have a 210 to 450, and then the next level is what? We have 46. Okay, so let's take a look at this spread here. Okay, I want you to be very careful because this, I would say Las Vegas Sands, right? I'm not sure whether this is a fair judgment right now because the buy and sell, there's a little bit of gap. Okay, so you can see we have a 210 and 450. We have a 250 and 580. That means to say, when you are doing this, right, the strategy requires you to sell a call at 45, and then you need to buy a call at 580. So something tells me that this is not a very good period for us to execute, okay? But let's say you really want to proceed. One of the things you can do is you can first do the transaction like that, okay? You can go and select on vertical, okay? You can select on vertical, all right? Then you can see we actually have the spread, right? You can change to vertical and you can choose. Do you want to short this thing at 46, 47? You can. You want to do it at 45, 46? Also can. But let's say now if you really want to do the transaction, right, should be credit. You should bring in the credit to your account. Okay. So if you're doing one leg at a time, make sure your sell call and your buy call is done on the same day. How many of you are still with me? Please comment, right? Okay, if you understand, both legs must be done on the same day. Okay, never go to sleep from there. Never go to sleep from there. All right. So what I will do, right, is can we assume something like this? All right. I want you to see whether if let's say you're very scared, if you're very scared, right, whether this order you're not sure how to do, I suggest you to do on vertical and then you click on the selling. Okay, click on the selling, then you do. All right. But because the stock, I think maybe the volume or whatever reason, the spread is showing a lot, it might not be able to execute that very smoothly. But let's come and take a look. Let's say we do this, right? You should receive a credit of about 50 cents. Okay, this spread itself, right, you should receive about 50 cents back. Okay, so let me take a look at maybe another company, Win Resort. Just hold on, guys, because market we still have about 15 minutes. So let's take a look, right, whether is this a better candidate to do or not. Okay, let me take a look for you. Okay, so let's say right now we go back to single. Okay, we look at single. Let's take a look. Do we have the options? Okay, so it seems like the options table is not fully appearing, right? But on my screen here, I can see that we have a little bit of spreads also on the weekly. Okay, let me take a look. Okay, so we have a win result. All right, so what you should see, right, is that your call premiums, guys, you can take this now. The sell call that you receive should be higher than your buy call. The sell call premium that you receive should be higher than your buy call. So what do I mean? All right, let me give you the actual example like this. Okay, let's take a look back at Las Vegas Center. Okay, so this is exactly what I'll be looking at. So let's take a look. Okay, this is my whiteboard. I'm going to write this down, right? So my sell call, okay, my sell call, I will be doing at the strike price of, say, 45, okay, 45. Okay, so this is 45. You should receive premium higher than 210 if you can. Okay, and then, okay, let me write it down for you. Sell call, you should receive a premium of higher than $2.10. And if you do a buy call, it should be at 46. Okay, your premium that you pay should be less than $2 or below. Okay, it should be less than $2 or below. So if you are doing the leg separately, I would suggest this. To play safe, do your buy call lower than $2 first. Then after that, you do your sell call. Okay, so you have different steps that you can take. But if let's say you are very confident, you can go in and do it. So the last round, right? Okay, guys. So if let's say you are doing on the this Las Vegas Sand, right? You should receive your net premium, your net credit from here. Okay, let me go back to my whiteboard. You should receive your net premium from here. How many of you understand from this trade already about bear call spread? If you understand from this, can you give me a okay in the chat? Give me an okay in the chat. Okay, yeah, right. So I'll give you an example, another example that I actually did my shorts on. Okay, this company, I have been looking at it for very, very long, and I think that the price will continue to plunge, right? Is this company called Alibaba? I think that the market will go down again for them. All right, so let me share with you this. So let's say we are doing for Alibaba, okay? I've actually did my spread at 195 and 190 and 195. But if let's say today I want to do Alibaba again, this is, let me see whether it's the spread better. Open interest, right? You should aim at least 300. And I think that Las Vegas Sand can be a little difficult to do. Okay, open interest you can do about 300. It's not always at the money. You should choose when the stock price goes to the resistance from here. Okay, so let's say today I am doing, right, I will be looking at my call spread like this. Okay, so let's say I choose, right, my trade that was done, I am doing, this is a 190 sell call and 195. 190 sell call and 195. Okay, so let me share with you how is it like. Okay, let's go back to my whiteboard. I'm going to erase everything here. Okay, so for Alibaba, what you can do is you can adjust to 190. This is a sell call at 190. Okay, then the premium you receive should be around the middle. Okay, let's say we talk about 350. Okay, because the market is not open, I can't show you. Right, then you can do a buy call at 195. You should be paying 195, right? You should be paying about the mid price. Say this is see if you can get your order done at 1.85. Okay, 1.85. So how do we calculate the ROI? Okay, how do we calculate ROI? Is very simple. Okay, so what you can do is, right, you use 350, you minus off 1.85. I'm going to use my calculator here. Okay, so this is what I do. 150 minus 1.85, you should get back about, this is 1.65. Okay, so this is the net premium you should receive from this transaction. Okay, this is the net premium you should receive transaction. So let's take a look at the formula, how we calculate the ROI. So 1.65 okay, divided by, so the spread is 195 minus 190, okay, then you receive the premium of 1.65, okay. So how we calculate is like that. So you have 1.65 divided by, this is 3.35, okay. Right, so your ROI would have been around 49%, which is still our passing of the trade. Okay, so this is how I do. It's not always at the money. You can use your hourly when the stock price hit resistance. When it goes down, you can start to execute. Okay, so one of the transactions that you can try to adjust is this, right? So okay. How many of you, right, actually understood the sell call calculation of the ROI? Right, if you understand the sell call calculation of ROI, can you give me an okay in the chat? Give me an okay in the chat. Okay, right. So overall, bear call, right, it limits the maximum loss here. Okay, it limits the maximum loss here. Yeah, so you guys understand, huh? All right, cool. So how I know my maximum loss? Okay, let me highlight to you. Your maximum is you will pay this amount of money, 3.35. Okay, so are you okay to lose 3.35 in your portfolio currently? If you are okay, then you proceed to do. Anyway, I have done Alibaba on the trades from here. And right now, I think if the price rebound from the hourly chart, you may still get a chance to do the sell call. Okay, how many of you love this strategy already? Just want to find out from the audience here, right? If you love this strategy, right, can you type BCS, bull call spread? You can type BCS in the trade. Okay, so my rule is like that. Okay, my rule is like that. Please do not do more than 3 bear call at any one time. Okay, so what happens, right, is that if the stock price goes in between, let's say the stock price goes in between, right, you won't be able to know how much you lost, but you know that your maximum is 3.35. So do you do individual order or vertical depending on your experience? If you can, do it individually because you can bargain the premium. Okay, the trick is when you do individually, you can bargain from here. Right, you can bargain from here. Okay, so I hope that using this bear call spread, right, it gives you a little bit of the premium going into your account. Okay, a little bit of premium going into your account. All right, so let's come back to do a summary of the bear call spread again. What are the important rules that you need to pay attention? All right, so never, okay, never try to go above more than 3 bear call spreads in the company that you do. Okay, so this is the thing. I'm very glad that I have these community members with me here. So one of the things I want you guys to pay attention is every single time, right, the options market changes. Okay, the option market changes, right? You might want to be able to protect yourself by following very strictly on the rules. Okay, so let me flash my slides again, and we go through the criteria one last time before you do the transaction. How about that? Okay, how many of you want to do the last Okay, this last recap. Let's do it together before we change the slides. Okay, so one more thing, 2 weeks to expiration. That's one last time. Okay, and risk less than 2% of your capital. Do not do more than anytime 3 companies at any one time. Okay, ROI is 40%. Okay, you sell on hourly resistance, do your chart, and your open interest try to aim above 300. Okay, so this is the trick to do the entire bear call spread. All right, so right now time is almost 9:30. I will take some of the Q&A from the audience right now. Okay, so if you have questions, right, you can let me know from here. Okay, if you have questions, you can let me know from here. If not, right, I will end the sessions in the next 5 minutes or so. And I'm really happy that all of you are here. And one of the things, right, is that is bear call really an important strategy to do? I don't think so, okay? Because one of the things about today's market is this, guys. You really have to have the right mindset before you proceed on, because if the stock market, right, is like your own, you are your own fund manager. Okay, guys, pay attention to this, right? If you are a fund manager, you manage your own money. Stock market is like telling you, you know, you can do it anytime at your own comfort pace. You don't need to follow everything. You don't need to buy all the stocks that is dropping, because you only can wait for the right condition, the right criteria, and then you do it. There's no need that if I miss out on the bear call spread, I am a loser. No, being patient, waiting in the game can also help you from here. All right. So how do you open the weekly options? What's the setting? You can go to your Think or Swim. Let me switch to my Think or Swim. All right, let me switch to my Think or Swim. All right, if you don't have weekly options, you can go to your setup, application settings. Okay, application settings. All right, you go to your display. Okay, you check on this box called weekly and quarterly. That will give you your weekly. All right, so this is the first thing. What do I mean by hourly resistance? Very, very simple. When you come here to your Think or Swim, okay, your trading view, sorry, right? So very simple. Let's say at Alibaba, yeah, let me key in on Alibaba. Okay, so what happens is like that. Now you can see that the hourly resistance, right, over the last few hours is here. You can use this to chart right now, okay? And what happens is that there is a support line, right? There's a support line. You can wait till here and you can see. So where are we expecting is the price to plunge here, okay? If the price bounce here, you can also start to take note. You can expect the price to go down in your favor, right? If you do this, you stand a higher chance to do your bear call spread, all right? So this is one of the way. So how do we determine the spread? Depend, guys. I will teach you the ROI. You can do 190 and 192.5. You can do that also. You can do 190 and 195, but never go above $5. Never go above $5 spread, right? So do we close if the price is below the call price or leave it to 2 weeks? For me, if you full profit, just leave it. Okay, if you full profit, just leave it. Why bearish on Alibaba? No, it's bearish on China. Basically, I'm bearish on China. Anything in the China sectors, I will do it. Okay. So if you are adjusting your vertical, right, in your desktop, can you adjust the price? Yes, the strikes, right, you can choose at any time also. You can choose 190, 195. Okay, you can choose 190, 195. All right. So please understand that this is only 20% of the time that you're going to do in the bear market. All right. Cool. So if you are unsure, right, what you can do is you can follow me by doing it on your this is your Think or Swim, right? You can do it on your Think or Swim demo account. All right. If you don't have a Think or Swim demo account, you can follow suit to do so. There's no need to rush about it. There's really no need to rush about it, because take your time to understand the transaction, the flow of the market, the criteria, and you can have a better chance to succeed. Okay, you can have a better chance to succeed, right? How about JD? JD will be bearish. Yes, I think so, because one of the things is that globally, a lot of businesses are being affected. a lot of businesses are being affected, and I don't think that any recovery is that fast. Okay, so always based on the ROI that you can manage. Anything less than 40% ROI, I will skip. All right, so if the price goes above the sell call in the 1 week before expiry, do we risk to lose money? Yes. If the price goes above, guys, pay attention. If the price goes above your sell call, you do risk to lose the money. Okay, you do risk to lose the money, right? So I explained very, very clearly. Go and explore it in your demo account how you can actually manage to trade somewhere, because bear spread consists of two legs. It's for people who understand option market slightly better, familiar with the order, you can do so. Okay, just remember, if your sell call and the price is above your sell call, you will start to see your account losing money. The maximum loss is the spread that you see. Okay, so do your calculation. I will switch the screen back to the calculation so that you guys can understand how to manage your risk from here. Okay, let me go back to the slides. Okay, let me go back to the slides. So this is how we calculate. Yeah, let me calculate from here. Okay, so does it affect the day trades I left if I buy and sell at the same day? No. Buying the same contract and closing the same contract on the same day affect your day trade. Buying a different strikes in the same day doesn't affect. Okay, so pay attention. Don't go and play the day trades because we are not teaching you to be very, very short-term trader. All right, being like a day trader, every time you can buy or sell the contracts from here. All right, so we are 1 minute to the market start. All right, if there's no more questions, I'll be glad to end today's sessions from here. All right, so let's do a quick summary. How do you find the sharing sessions today? Very, very useful and powerful. Right, if you do, right, you can give a yes in the comment. I will be very, very grateful that to continue to do this type of training for you guys. Yes? Okay, so please take action. The market is cheap, and invest safely. All right, so see you guys. Market is at 9:30. Go ahead and practice. We'll stay behind for another 2 minutes for any Q&A. Right, if you are still following, do stay behind to let me know. Okay. What is sell on hourly resistance? Ming Hong, is the charting that we do. Resistance is like the price, right? That the stock will hit the ceiling and the stock price will go down. Okay. Open interest is the criteria on the options that you want to see. Is there a lot of contracts floating in the options? Yes. Okay, good. Okay, that's all. If there's no other questions, I will end the sessions today, and I'm very glad that you guys attended. All right, see you guys in the next training. Bye-bye. See you guys in the next training. Bye-bye. Yes, okay, invest safely, guys. Invest safely. Okay, thank you. See you guys. Bye-bye.